post patterns like this and you're wondering, how is this pattern being traded? How do I make money off a pattern like this? What narrative sponsors move like this and all of that? All you have to do is watch this video to the end. Before that, don't forget to like, repost, and if you have any question in the course of going through this video, you can drop them in the comment section and I'll do it to attend to every one of it. Okay, now remember your traditional order blocks or demand zones, whatever you recognize this type of a move as. Now the main purpose of order blocks like this is to do what, that when price approaches them and picks up the order, right, we anticipate that they put in another high. And in the case of the bearish order block, we anticipate that when price approaches them and picks the orders resting on it, we do what, anticipate that price puts in a new low. So now let's imagine a case scenario whereby these order blocks fail to carry out their purposes, which means this order block actually fails. Now two things can happen. An order block can fail with a reaction, a significant reaction to it before the failure. I think some of you would have had setups like this whereby you've placed your buy to and then price is going your way. All of a sudden price takes out the zone that you are looking to take a buy from. In the case of a sell, it can look like this. You have a setup that is going your way, price mitigates and is going your way, and all of a sudden it does what, it takes out the zone that you're looking to sell from, right? So this is one way that an order block can be failed, which is failure with a significant reaction to it. Now when another block fails with a significant reaction to it, a flip zone is being created. This is what you have most ICT traders call what, a flip zone, whereby price takes out a demand zone or an order block and creates what, a bearish order block or a bearish or bullish order block, depending on the direction of price before the failure. This is what, a flip zone. But the inverse, another type of failure of an order block can be what, when an order block is failed without or with negligible or no reaction to it, whereby you just have an order block being failed straight like this, like price just takes it out without any reaction to it. Remember, the first type of failure that I talked about is what, the one that price reacts to it significantly before taking it out. But you can see that this one, price just failed through without actually reacting to it at all. Most of the times the reaction can be negligible or it can be no failure at all. This is the type that creates what, a reclaim block. In the case of the bearish or order block, this is what it will look like when price just runs through it with little or no reaction to it, right? This is exactly what it will look like. Remember that the first type of failure of an order block I talked about is the one that price reacts to it first before taking it out. This one creates a flip zone, while this one creates what, a breaker block. So a breaker block is being created when price takes out an order block with little or no reaction to that order block before its failure. So when something like this happens, most traders now anticipate to do what, to take a sell position from a zone like this, right? This is the breaker block. So the failure of a bullish order block creates what, a bearish breaker block, while the failure of a bearish order block creates what, a bullish breaker block, where you have people doing what, setting buy positions on zones like this and what, taking the buys, something like this. I think I have something mapped out on XAU, should be on this breaker block. Let me see quickly. All right, yeah, this is a very good example of a breaker block. You can see that this is a bearish order block where people would have been looking to do what, people would have been looking to take sell positions to put in a new low. But what happens, price actually took out that zone without reacting to it. Price actually took it out. You can see it just took it out straight up. So the reaction that creates a breaker block must be a reaction that is negligible. So it must be little or no reaction. It's not something like this. Price must not react to it first before taking it out, right? And when something like that happens, you now anticipate that price comes back to mitigate the order block and do what, continue to the upside. So this is what a breaker block looks like. Now back to the main reason for this particular video, which is a reclaim block. Now what now creates this reclaimed blocks? Now a reclaim block is being created by the failure of a breaker block. Remember, what creates a breaker block? A breaker block is being created by the failure of an order block. The failure of a bullish order block creates what? A bearish breaker block. The failure of a bullish order block creates a bearish breaker block. While the failure of a bearish order block creates what? A bullish breaker block. Now, when this breaker block fails, that is actually what now creates these reclaimed blocks. So it is safe to say that what a reclaimed block is the failure of a breaker block. The failure of a breaker block creates a reclaimed block, right? Now you can have something like this. Remember, this is what, when price takes this out like this, now you're anticipating to do what? Take a breaker opportunity. For those that trade breaker blocks very well, you're looking to do what? To take a breaker opportunity. Now imagine a case scenario whereby price now does what? Price now takes out that breaker block. More like the breaker block now hits your stop loss, right? This is now the failure of that breaker block. So I'm trying to tell you that the failure of that breaker block that you're now looking to do that you are looking to take is what creates what? A reclaimed block. So it is safe to say that a reclaimed block is a block that previously was intended to buy price and it fails and then later gets reclaimed, or previously intended to sell price. In this case, you can see that this was what? A bearish order block that was previously intended to sell price, and then it failed to do that, right? It failed as a breaker block. So what are you now doing? You're now anticipating that price comes back into that initial order block and sells something just like this. Let me see. So you're not anticipating that price comes back into that initial order block that was intended to sell price and do what? Mitigates it and it sells. This is exactly what the reclaimed block looks like. In this case now, remember that I told you that the failure of a breaker block is what creates what? A reclaimed block. So look at it as a scenario whereby price fails to do what? Mitigate here and sell. Instead, it comes back, it extends back inside this leg. So what are you anticipating? That price will come back to reclaim the initial orders resting on this order block, reclaim them and continue to the upside. This is exactly what the reclaimed block looks like. Just like this, the failure of a breaker block is what creates a reclaimed block. So this is what the reclaimed block looks like. Just like this, you have this is a schematic diagram. You can see we have what? A bullish order block. Price does what? Price comes, fails the bullish order block and fails to do what? Fails to create a valid breaker block, right? So the failure of a breaker block, right, now creates what? Now makes price to come back to pick up the orders or reclaim the orders that were resting on this order block, come back, pick them up and continue to the upside. So let's look at some of the chart examples. You can see this is XAU. Okay, this is AUDJPY. And you can see here we had this demand level, this order block here, bullish order block at this point that a lot of you would have been looking to take buys from as per the traditional sweep, inducements, this, that's right. And then you can see that what happens, price comes and price takes it out with no reaction. Remember that the reaction must be what? Little or no reaction. It must be a very negligible reaction, right? Now price takes it out once, extends back to the upside, and what happens, you can see that when price comes back, it actually came back to do what? To reclaim the orders resting on that level. And that was what sponsored this particular buy on AUDJPY. You can see exactly here, price comes back, takes the orders previously resting there and continues to the upside. That is a reclaimed block. In this case as well, you can see what another reclaimed block, but this time a bearish reclaimed block. You have this initial supply zone or bearish order block level, which price takes out with this wick, right? Price took it out and then extends back inside. Remember that I told you that the failure of a breaker block is what creates a reclaimed block. So you're now anticipating that price is going to come back to this level, this initial order block level, pick up the orders resting on it and do what? Sell down. This is exactly what the reclaimed block looks like. Let me see if I have more examples here, or let's go to AUDUSD. There should be more examples here. All right, so this is AUDUSD, and again you can see what? You can see the reclaimed block here. This was an order block. The price did what? Price failed with a negligible reaction to it. Price took it out and extended back to the upside. And then what happened? You're now anticipating that price will come back to reclaim this level, and it comes back, mitigates, and what? Continues to the upside. A very good example of a reclaimed block. Again, we have more examples here. You can see what happened here. Bearish order block. The price takes out with little or no reaction to it, just takes it out straight up, right? And then comes back again. Now you're anticipating the price is going to come back to do what? To reclaim the level of that bearish order block. That happened there, and that happened here as well. You have this bearish order block level, right, or a supply zone here. The price took out with negligible reaction to it, little or no reaction, and then price comes back, does what? Mitigates it, and what? Continues to the downside. And I think this reclaim block has played out a lot on gold, a whole lot this year. So many times. You probably let me see. You can see what this is last week's price action. This should be 29th of January. You can see what? A bearish or a bullish order block. The price took out with negligible reaction to it, and what happens? Price comes back to mitigate and continues what? To the upside. This is exactly what the reclaim block looks like. This is a breaker block. Here again, you have what? A reclaim block. When price takes out a bullish order block with negligible reaction to it, it comes back to what? Mitigate and continue to the upside. So I want you guys to go back to your chart and try to backtest this model, not just on forex currencies. This occurs a lot on synthetics, a whole lot on synthetics, right? So you can go back to your charts, look out for these things, practice them, and make out your validations for them. If you have any question after going through this video, feel free to ask under the comment section and tag me. I'm going to make sure to reply.